Panic! U.S. government debt has been downgraded. Oh my goodness, there's going to be blood in the streets. I can't believe this. The risk-free asset is downgraded. What are we going to do? So I'm looking today. The yields are up a little bit. The yields go the opposite of the price. Yields are up. So the 10-year is at 4.082. The yields are up 0.77% from close yesterday. The Dow is down 38 basis points. NASDAQ's down 1.3. The S&P 500 is down 0.77. All right. For those of you unaware, we've been through this before. All right. In 2011, I remember like it was yesterday because it was funny. I was working at USA, and I remember we're doing a seminar in West Point. I'll never forget this. My man Rich and I were driving. We did a seminar. We came all the way from we're in Buffalo or Pittsburgh or so. We went from Pittsburgh to Buffalo to Rochester to Syracuse. Seems like I'm missing some place. And then we came down to West Point, and then we're going to go up to Connecticut. We used to do these seminars. It was fun. I had a lot of fun. Anyway, I think we went to West Point when we went to Manhattan. I can't remember. But anyway, long story short. I remember driving to West Point, and, you know, that's the military academy, and USA has a lot of officers. And so we had a big turnout there. And that was the same day that we got USA got downgraded. And people were flipping out. And I said, the only reason we got downgraded is because the U.S. government got downgraded. You can't have a private entity with a higher credit rating than the U.S. government because we own so many government bonds. I mean, any insurance company is going to own a bunch of government bonds. If the U.S. government gets downgraded, so won't the insurance company that owns the government bonds. No big deal. Anyway, so check out what happened. Black Monday 2011 refers to the August 8th, 2011, when U.S. And global stock markets crashed following the Friday night credit rating downgrade of the Standard & Poor's of U.S. sovereign debt from AAA or risk-free to AA+. It was the first time in the U.S. history that the U.S. was downgraded. Moody's issued a report during Monday trading, which said that their AAA rating of U.S. credit was in jeopardy. This after issuing a negative outlook the previous week. All right, by market close, the Dow lost 5.5%. Making the sixth largest drop of the index in history. All right. U.S. President Barack Obama attempted to calm the markets during trading in a speech from the White House, but the Dow lost 200 more points within 220 minutes after it concluded. All right. NASDAQ lost almost 7%. S&P fell 6.66. Oh, my goodness. All right. So we went through this, and we fast forward 12 years, and I got out of the market because that we lost a lot of money. So let's just check this out here. I mean, all right. So this is Fitch. All right. So Fitch has downgraded U.S. credit from the highest rating, cited the nation's growing debt and eroding political stability. So did Fitch not know? Oh, it's so dumb. Did Fitch not know that the political instability wasn't here? So we were at the highest rating previous to this, and then one day Fitch woke up and said, "You know something? The U.S. is taking a lot of debt. We're going to downgrade it." I mean, which inherently means that we were still at the highest rating before that, even though we had 30 trillion of debt, 31 trillion of debt, and then, of course, the deficits forever. All right. In Fitch's view, there's been a steady deterioration in standards of governance over the last 20 years, including on fiscal and debt matters. The repeated debt limit, political standoffs, last-minute resolutions have eroded confidence in fiscal management. I mean, why would you ever have confidence in fiscal management just because there isn't a debt standoff? I mean, so if the Democrats control Congress and they said we're just going to have no debt limits anymore, you're going to be like, oh, no, it's good. I mean, or the Republicans, it doesn't matter. It's all a big scam. But anyway, the point being is I'm going to share something else with you, too, because this is just silly on its face. At the end of the day, my friends, at the end of the day, this is all, we've known this. It's not just now. It's not just on Barack Obama and Big Mike. It's going back. I mean, literally, I showed you videos or cartoons of the debt on their FDR, and people say, oh, we're all going to crash. I showed you a video I referenced in my new book, Relax and Retire. I'm just watching my dog over there sniffing around because I just planted a bunch of new plants for my wife. And I want to make sure he's not digging into them because I'll be mad. Anyway, where you show in 1987, right, I think it's before the crash, some guy from Morgan Stanley or something like that was on like inflation is going to be runaway inflation because of the out of control deficits that Reagan is spending, blah, blah, blah. And it never happened. It never happened. And just go back to history, it never happened. Out of control spending that never led to runaway inflation. I mean, will at some point? Who knows? I don't know. But you don't know either. And so just because a government gets downgraded it just doesn't mean anything. Now, inherently, that means all private debt will be downgraded too if it was above. There won't be any private trading debt at AAA rating. It's just you can't have a higher rating for a private entity than you can for a government entity. It just doesn't make sense. All right, so check this out. Here's the dollar versus the Russian ruble. Remember, we had a debt crisis in 2011. The dollar traded at $1 for 30 Russian rubles, and now it's $1 for 92 Russian rubles. All right, well, that's just Russian. There's a right there. When Joe Biden said we're going to destroy the Russian currency, it didn't happen. All right, so now let's go to the Russian ruble. Let's go to let's go to the Australian dollar for giggles here. So the dollar in 2012 was trading $1 bought you 93 cents of the Australian dollar. Now it buys $1.52 of the Australian dollar. So the dollar has strengthened. All right, so that's the Australian dollar. Let's go to, seems like I don't care about Bitcoin. Let's go to, I want to see Canadian dollar. Watch this. All right, so I like hockey, so the Canadian dollar is always of interest. So here in 2012, $1 traded at $1 Canadian dollar. Now $1 buys $1.33 of Canadian dollars. If you're trying to buy your vacation home in Canada, now's the time to do it. Let's look at China, because everyone's like, oh, Chinese yuan. Oh, my goodness. Let's look at China. Here's the Chinese yuan. Oh, it doesn't look like it's declining, is it? So a dollar bought $6.31 of the Chinese yuan. And now it buys $7.18. All right, now let's do the Chinese offshore. I don't know what that is, but we'll just look at both here just for giggles. Chinese offshore, Chinese yuan offshore. Is that the same thing? Just do that? Yeah, okay, I guess the same thing. So there you go. All right, now we want to go to, let's go to Japanese yen. Pablo. I guess we go to, with euro, there's a euro. Let's take a look at the euro. All right, so we actually hit par. Parity for the euro just about a year ago. We hit parity. Yeah, September 2022. The dollar was actually trading higher than the euro. Now it's dropped that's about a 10% decline over the last year or so. But going back to what $1 bought 76 cents in euro, now buys 91 cents in euro. So that could say, hey, look, that's collapsing relative to last year, but not certainly relative to 10 years ago. I mean, if we go to Japanese yen, I mean, I tell you, this the dollar is strong. Look at that. We go to max. So back, look at that. Back in 2012, $1 bought only 76 Japanese yen. Now the dollar has doubled in value relative to the yen. So why is that happening? Because Japanese are deflating their currencies so they can export stuff to us. That's just a fact. I want to see if anything else I want to look at. Swiss franc, it was at 90 cents. We had $1 about 90 cents of Swiss francs, and now it's at 88. That's 10 years ago. Now it's at 88. All right, so that you can see the Swiss franc since October 2022 has dropped, has gained in value relative to the United States. The dollar has dropped in value by about 12%. All right, so we got Swiss franc and we got the euro, but that's pretty much it, man. I mean, everything else, the U.S. dollar is still. I mean, do you really think the euro is in a better place than us? Let's look at the Mexican peso. I mean, you can think that. I don't know. Look at that. The peso, $1 bought 13 pesos in 2012, and now it buys almost 17 pesos now. Anyway, the point being, I thought there was another one I wanted to look at here. The point being is, I mean, the dollar is still the only game in town, my friends. It's just that simple. And hold on just a second. Anything jump out at me here? Romanian, Rwanda. Let's look at the Rwandan franc. Yeah, I'm not going to bother with that. Serbian, silver. Let's just take a look at the dollar versus silver. It's trading at 24 cents an ounce, $24 an ounce, which is down 2.21%. If we look at silver, let's just go back here. Histoire, we can see in 2012, it cost you, right there. Right there is the debt crisis. $41 for an ounce of silver, and you can see it's gone down now to $22 or whatever it is. I mean, you know, I don't know what to tell you, man. This we look at dollar. That just means the silver has gotten weak against the dollar, i.e., the dollar has got strong against the silver. Just no two ways around. We look at gold. I have no idea what gold's trading at. 1937. So we go back to all. So right here, gold was trading at 17. Was that 2000? I'm going to go 2000 right there. So it's trading at 1816. Gold has gone up by $140 over the course of that 12-year, about 12-year time frame. So the dollar's not collapsing. It's just, come on, let's not be silly here. And I mean, so the dollar has gone. Let's see, go. What's this fourth? 435% has a gold gone up since when? Since 19. That doesn't make sense. Gold has gone up by 428% since what, over here? Yeah, okay, since 1994. Let's go back to, and that's the max. I like how that's the max. Let's go back to 1980. Anyway, nothing to be worried about. I mean, the debt is the debt. We're never going to get rid of it. It'll always be there. There's nothing to change in your portfolio. You shouldn't panic. This has happened before, and we survived. At some point, we'll all die anyway. It doesn't matter. But the panic on this stuff is out of your control. You know, learn the Serenity Prayer. That'll help you a lot. All right, love your thoughts. We'll see you.